Hello everybody, welcome back to the channels. In this video, after a number of requests, I'm going to be sharing with you a little bit of information about myself. So I'm going to start by sharing with you some information regarding my academic background. After that, I'm going to be boring with you some information about my personal interests if you are interested in that. After that, I'm going to be telling you a little bit about my trading history. And then following on from that, I'm also going to be looking at my trading strategy, my trading philosophy, what kind of positions I have taken in the past. And then I'm going to be finishing off with you with some information with regard to the reasons why I started the $1 Million Challenge, what my outlook is on that, and what I see for the future in terms of the overall markets. In terms of my academic background, I graduated with an honours degree in economics in terms of specific modules studied. These included microeconomics, macroeconomics, government policy, international trade, as well as business management and marketing. And I also studied the elements of law as well. So after graduating, I pursued a career in accountancy. Unfortunately, I didn't see myself as an accountant for the long term. Contrary to popular opinion, I am not a qualified accountant. What I then did after leaving my job as an accountant, I decided to study further. So I carried out a postgraduate from Lancaster University, and this was in business and economics. So what this did, this enabled me to teach. And then I decided to pursue a career in further and higher education. And this included initially a main focus on teaching business. So in terms of my specialist subjects over the years, these include accountancy, economics, business and law. For those of you who know the British curriculum, in terms of the levels I've covered, these include levels 2, 3 and 4. So level 2 is GCSE level, level 3 is A level, and I've also taught at level 4, which is the equivalent of year 1 at degree level. And finally, I'd now like to share with you one of the proudest moments in my academic career. So on the screen here, you'll see this was taken just prior to COVID. So this was in 2020, early start. And this is a situation where we attended the British Education Awards. One of my students was nominated for a national award. Unfortunately, she didn't win the national award, but she's now just started a new business. This is a startup enterprise, and I certainly wish her very, very well. So I'm now going to share with you some of my personal interests. First of all, I have a keen interest in travel. I've currently travelled to almost 30 countries. I've travelled to most of Europe. I've travelled as far as Malaysia and Singapore in terms of the longest distance. The area that I haven't been to is North America. I haven't been to Canada. I haven't been to USA. So that's the next part of the plan. Hopefully within the next 3 years, I will be able to meet and travel to the USA to certainly meet some of the people in the Discord. And the next interest I'd like to share with you is an interest of sport. So I am a keen boxing fan. I'm also a keen snooker fan. Snooker is something that I played quite a lot in my youth, not currently playing right now. I've also played a lot of squash. But in terms of my other key sporting interest, that is football. So for those of you living in the UK, I am probably now going to get a lot of negative comments. I am a keen supporter of Manchester City, so I'm going to share with you again a picture prior to COVID. This is one of the games that I attended. I don't attend all of the games, but certainly times are good. So in my personal opinion, one thing I will say about Manchester City, you'll see here this was a day in Manchester when the weather was good. It wasn't raining. And final thing I'd like to say about Manchester City, I believe this is the best team in the world, the best team in the land, best team in Europe with the best manager. The next thing I'd like to share with you is a little bit of my trading history. So I first started trading using the app Trading 212 around about July 2020. Unfortunately, this was not a bullish market at the time. It was also a time of COVID, so the markets were going into quite significant decline. So I did see this as a good opportunity to get into trading because the best time to buy is when there is fear in the market. The markets were down. There was no vaccine at that time, July 2020, and lots of stocks were on a general downward trend. However, I did see this as a great opportunity. One of the stocks that gave me the best return was ticker symbol ABML. This is a stock that I managed to invest in at 0.30 cents, and it did quickly run up in excess of $4, and at one point it was very, very close to $5. So there were a number of other stocks that I invested in with great returns, including Alpine. There was also Senseonics and many of the other EV stocks such as NEO with great returns in terms of my overall portfolio return very, very quickly from starting in July 2020 to around about February 2021. The overall portfolio showed a great return of in excess of 300%, and then from February 2021, I'm sure you all know what happened. So the next thing I'd like to share with you is my trading strategy from February 2021. So what happened after this? The market again went quite significantly down. So there was an overall high of around about February 2021. And then from this time, strategy had to change. There was no longer a bullish market. So what I'd now like to share with you is some of the key beliefs in terms of my personal trading strategy. And on the screen here you'll see number one thing I think is a great thing to do for all investors, and that is when you're looking at charts, try to look at support, try to look at resistance, also try to understand if a stock is on an upward trend or a downward trend. So again, a little bit of insight in terms of chart will help with this, and it's certainly a good time to buy when the stock is on an upward trend. But so we're looking at a dip in an upward trend. So chart analysis does not work well with penny stocks, does not work with hype stocks. So that's one thing to bear in mind. And also chart analysis does work best with the blue chip stocks. So, and also finally, in terms of charts, I'm not a great believer in charts being the main focus of your return. I also believe that news and sentiment is much more important than charts. So chart is just one tool that you need to be aware of. And on the screen now, I'd like to share with you my second philosophy in trading, and that is avoid treating hype and penny stocks as blue chip stocks. Try to reduce the amount of these held in your overall portfolio. So these kind of stocks are stocks that you should take profits quickly. However, some stocks can certainly be great for the long term, but many of them will go down after, especially after having strong run-ups. And number three, I think, is a very useful lesson for everybody, especially when it comes to minimizing losses. So getting into a habit of using stop losses will certainly minimize your risk. It will also reduce your losses. So what I'm saying here is, depending on the stock, depending on your risk tolerance, it's a great idea to start using with habit stop losses of 8 to 15%, depending on your, as we said, depending on your risk tolerance. And this is especially relevant when you're looking at new hype stocks, new penny stocks, and sometimes it's a good idea just to completely sell out instead of using a stop loss, especially if you're looking at a potential downward trend. This will help you, especially with regard to avoiding bag holding. Diamond hands is something that I don't believe in for all stocks. It's certainly great for the long term, especially for the blue chip stocks, no problem there. And it's certainly something that you need to possibly review. It's not a great idea to diamond hand everything. And I think overall what I have seen in the market is that the most risky of all stocks are certainly the bio stocks. So these are the ones that you need to be careful of. One little bit of bad news, especially with the FDA, can crash these stocks. We have seen stocks go down 40, 50, 60, 70, 80% just with some bad news. But on the opposite side of things, these can also shoot up and give you huge profits and huge returns. I've had some great returns in ticker symbol BNGO, and as I'm sure you've seen, that one is now from $9 currently trading closer to the $2 mark. And number four, in terms of my other belief here, is it's very important to have a diversification. If you continue to diversify your stock holding, then you will reduce your risk. In terms of a general guide, we're looking at between 80 or 85% or even higher of blue chip stocks, and then looking at 15 to 20% of other stocks. And the final trading strategy I'd like to share with you is something that can give you huge returns, especially in the long term, and this is looking at dollar cost averaging. So this is especially great when you look at high conviction stocks. So these can include stocks like Tesla, Apple, Nvidia, AMD, etc. So when these stocks dip, these are great opportunities to buy in, average down, and also increase your compound returns. We're looking at, depending on what you can afford, but certainly even an investment of around about $100 or more will give you great long-term compound returns, especially when you can get this done as a habit. And finally, in terms of my overall personal approach to trading, I do see myself more of a long-term investor, less of a day trader. In terms of my overall opinion on this, I do believe that long-term trading is much better than day trading. One of the reasons for this is I think that day trading is very stressful. It's also very time consuming, and in terms of overall returns, I do think the market always recovers in the long term, and if you can buy stocks at the right price, then long term I think the returns will be great. And I'd now like to finish off by giving you a little bit of an insight in terms of the $1 Million Challenge and why I started this. So the $1 Million Challenge was something that I looked at with regard to compound return investing. So the power of compound return investing is huge. If you Google some calculators for this and put in small amounts, you'll see cumulative returns on small amounts. So one of the things I did in the original video for the $1 Million Challenge was look at what happens when you double a penny every day and you keep doubling it. You'll see that there are returns that are exceptional. So that was something that I thought, well, how can we apply this to trading, and how can we use this to minimize risk and maximize return? So in the stock market, we know that some people go for 5% returns, 10% returns. Some people even go for squeeze stocks, and again, similar to this situation with losses. So what I wanted to do is go for a figure that I thought was fairly achievable, and also I didn't want to do this in terms of a get rich quick scheme. I was looking at more of a longer term strategy, and on the screen here you see that my thinking on this was around about 3 years. In terms of my overall target return, I was looking at about 3.5%, and what this resulted in is a number of trades which is 201. So I wanted to also use a figure which was affordable by the vast majority of traders, and that was a figure of around about $1,000, although the challenge can be done with a smaller amount as well as a larger amount. So using the compound return calculation of reinvesting the full amount with your profits in each trade, doing that 201 times will give you $1 million after three years, and 3 years includes 750 days of trading. So in terms of looking at how to achieve that, we're looking at between 2 and 3 trades a week to get this done on time, and sometimes less depending on the returns, because some returns you make a lot more, but also bear in mind that there are losses as well. And finally, I'm going to finish off by giving you some stocks that I'm most bullish on. In terms of the most bullish stock, especially for the long term, which I think is right now at a great buy price, and that is ticker symbol ABML, American Battery Metals. This is a stock that has been featured on a number of occasions on the channel, and I think long term the potential, especially with EV and battery recycling, is huge. The market opportunity is huge, and this is a stock that I'm sure you've seen on a number of occasions on the channel. The other stock I think has got great huge potential, especially this year, is ticker symbol NLST, also known as Netlist. So please refer back to other videos where I've covered Netlist in detail. I think there's going to be a huge catalyst on that going forward with regard to the Google case. And finally, many of you will have probably come to this channel through ticker symbol MMAT, Metamaterials. So what can we say about this? This has had a number of disappointments. This has also had an outcome which we didn't all expect. But long term, I still think the future is great. The potential for defense, medicine, the EV sector, electronics, etc., as well as the medical area is huge. So Metamaterials, ticker symbol MMAT, is something I still think is a great long-term hold. And finally, thank you very much for watching. Please stay tuned.